Okay, guys, as always, we got to start with the bond market. The bond market is the reason that everything's selling off. So if you don't understand why the thing you like is selling, here's the answer. As always, I timestamp my videos below so you can immediately skim to whatever it is you're interested in, whether it's the uranium or gold or just the price levels. But I would encourage you to hang around for at least a couple of minutes, all right? Just listen to my intro because I want to explain some things to you so you understand exactly why this is happening, because all of this was predictable. All right. And what happens next is also predictable. So instead of just letting me tell you what to buy and where to buy it, I can try to help you understand why this is happening so that you can survive and even thrive on your own. Honestly, on your own being the key word, because when I started this channel, what I had in mind was not just to hand you fish, right? I wanted to teach you how to fish, because most of the content producers, whether it's here on YouTube or on places like Twitter, most of them honestly don't know what they're doing. And I don't mean to say that in any kind of derogatory way. It's just a matter of fact statement, okay? And that's part of the reason that I got on. I decided I wanted to contribute, and part of it is just seeing all this nonsense and the blind leading the blind, which is not to say that I have 20/20 vision or I have all the answers or I'm an expert, because I'm certainly not. All right. But I'm just getting tired of seeing the nonsense and all the excuses and people making up their own narrative to explain away what they don't understand. So this is kind of my way to kind of, just help get back. But remember, it's not about me telling you what the answers are. It's about walking through it together, one step at a time. And each video picks up from the last video in a linear fashion, right? Just like a TV show or whatever. We have an ongoing story here. We're not just going to talk about what happened in the market today. We're going to pick up from where we left off, right? And then how things are panning out the way that we expected. Or if something happens unexpectedly, we're going to talk about that too and why we got it wrong, right? Just constantly learning, constantly evolving. And so that you can get to a point where, it's like, it doesn't matter who it is. Let's just say it's some other guy. If there's a guy on the internet, on YouTube or Twitter, and he can give you, the exact price every single day or where, the trading rate something's going to trade in, with penny precision, all right, then obviously you could become very wealthy. It's like having the sports almanac, Back to the Future, right? But what happens if you lose that almanac, right? What happens if that guy gets hit by a bus? Well, then where are you going to get your water when the well runs dry? I mean, you have no source anymore, right? Because you don't know anything, right? Because you failed to teach yourself. Who is better than yourself to rely on, right? There's nobody more reliable than your own self, right? Nobody is better at this than you, okay? Right? You are better than me. You are better than everyone else you may subscribe or listen to. You just may lack the knowledge or the wisdom and discretion to take advantage or the confidence to strike. And that's just what I hope to impart on you, maybe not instantly, but certainly hopefully over time, right? So that you can be self-sufficient, right? Because like I said, I'm not trying to hand you fish. I'm trying to teach you how to fish. So everything I do, all these prices that I come up with that we rebound on, every time, we make even the swing trades or the investment plays, I tell you when I buy and sell. I do all that for a reason, right? It's to help instill confidence in you based on the things that I'm doing so you can see it in action. Okay, so with that being said, we're going to recap on something we've been talking about in the past, which is fact and reality versus narrative. Now, let's go ahead and just make this a little artistic, okay? Let's say that facts are over here, okay? This is reality right here. All things real exist here, okay? And let's say this box right here is narrative, all right? Now, there's a reason why the phrase exists. Markets will remain irrational longer than you can remain solvent, okay? Because if you're trading rationally, if you're trading on fundamentals, if you're trading with logic and reason and common sense, then for at least some period, you're probably going to lose money, okay? And that's because you're probably not trading the narrative, all right? And a good example of that would be let's go here, would be Tesla. Do you really think that Tesla is worth more than every other auto company in the world combined? I mean, honestly, more than Ford and GM and Volkswagen, all of them, Toyota, all of them combined? You really think so? No, of course not. Right? No reasonable person says that for any reason. It doesn't matter what the future, nothing. They're not worth more, period, end of story, okay? But if you traded or failed to trade them, all right, based on that sound logic and reason, then guess how much money you missed out on, right? You missed out on just the most ridiculous swing of all time. all right? Because you traded reality and everybody else traded narrative. You understand? And this applies in the inverse too. Okay, so as things are selling off, you may be asking yourself, like, man, why is the thing that I like selling off? I mean, uranium is fundamentally bullish. I mean, there's supply deficits, there's sanctions, there's all these things, right? Or even gold and silver, like fiat's dying. Look at all the debt. Wow, how come my thing's selling when it's fundamentally bullish? It's because, first of all, it comes back to the bond market, okay? As long as debt is collapsing, as long as the debt market is absolutely imploding on itself, everything's going to sell off, okay? We've talked about this in many videos up to this point. There's plenty of precedent. I really highly encourage you to go back at least 1, 2, 3 videos if you haven't seen any videos to this point. I really take the time to break this down and explain it to you. I don't really want to do it again. But just so you understand, our entire economy is a debt-based system, and debt is collapsing, okay? And as these debt rates go up, it tells you that people are selling bonds, and they're selling bonds because they're losing faith, okay? And as people lose faith, it's a sign of what's coming. I mean, the bond market's essentially pricing in a recession. It's telling you what's happened next, okay? And the reason why the narrative changed here after the FOMC meeting is that back here, the Fed kind of regained control of the narrative, which is to say, we're in control of inflation, all right? And because we're going to raise rates faster and further than people anticipate, okay? So don't worry. You know, people are saying that 50 basis points aren't enough, but don't worry, we're going to do 75 basis points. And even though in reality that's nothing, you know, that's 50% more than what they were going to do before, okay? So on a percentage basis, that's a huge increase, and it's more than what the market expected. So reality be damned, doesn't matter. The narrative was that the Fed was going to do whatever it took to take care of inflation. So when the day came to actually raise rates, not only did they only raise 50 basis points, but they actually said that 75 basis points weren't even on the table. They're not even considering 75 basis points. Okay, so the knee-jerk reaction was that, oh God, this is great. The Fed's dovish, so let's go buy stocks, right? And so that's what all the suckers did, all right? But it didn't take long for them to realize, like, holy crap, hold on a second. We're actually just lost at sea. There is no narrative at all, right? What's the narrative? What's the Fed doing? Nobody knows anymore, okay? Because the Fed's committing the worst sin of all, which is they're not actually doing anything. They're not raising rates enough to slow down inflation, okay? And they're not printing money to keep boosting the economy. So they're not actually not doing anything. They're just letting everybody float at sea, trying to find their own way, you know, in these dark waters, okay? And the market's starting to realize this. So this is instilling just massive fear and panic, all right? And people are running to cash. So it doesn't matter what you believe is good or bad. Fundamentals don't really matter right now, except they kind of do in so much as people are running to cash, waiting for certainty, okay? Because that is technically a smart, sound play. Now, in the end, fundamentally, your commodity plays are going to win out, okay? They're going to win out because soon narrative will be unable to escape reality. This will grow to be just simply too big, okay? And it's going to encapsulate everything. But until that happens, you're going to go in this back and forth where narrative is going to come over here, and then it's going to break again, it's going to break again, and you're going to have all these sub-narratives until it just breaks, okay? Because this is all just, this is like the Wizard of Oz, okay? There's a man behind the curtain, and he's pulling a bunch of levers around, all right? And everybody's like, oh my God, this guy's so powerful. Look at him, look at this wizard. And it's like you and I are like Dorothy or whoever it was that looked over first, and, you know, and saw Toto pulling the curtain, right? And it's like, everybody else is still looking at the wizard, but one of us looked over and got the glimpse, okay? And so even though not everybody has figured this out yet, people are starting to see it, right? Some of us have already gotten a glimpse of what's behind the curtain. And so at the end of the day, you have to understand that it's all going to come around full circle. But for now, you have to keep trading in the narrative. And the narrative is that there is no narrative. We're in nomad land, right? Nobody knows what the hell is going on. The Fed has just pretty much just given up, all right? They're not giving the market direction. They're not being honest, right? They're not being firm. They're not doing anything, okay? And this has people freaked out. And so the bond market's selling off. They're pricing in a recession. We're probably going into stagflation. mathematically, once rates get high enough to a certain point, remembering, of course, that for every 1% rates go up, we get $300 billion in interest towards our sovereign debt, okay, payments. And we only take in $4 trillion worth of tax receipts, okay? So this doesn't take long before this becomes unsustainable. So mathematically, the Fed is going to have to print unless we allow ourselves to default on our sovereign debt, all right? And that's, that could be the black swan that, quote unquote, nobody sees coming, because there's not a single person on the planet who thinks that's going to happen. Everyone on the planet believes that once we get up to maybe 5% at the most, we start printing money, okay? So that's the consensus, but right now it's nothing but fear and uncertainty, and as long as that persists, then the markets are going to sell off. I mean, how long since I first made this channel? You can go back and look. I've been talking about where we're going, okay? And I had my first initial price targets down here. Let's see. I had 12,000 as the first reasonable spot for a rebound on NASDAQ. We're approaching that one quickly right here. I mean, I do think we'd probably get a bounce there, to be honest with you. The S&P has been bouncing on this strong support. You lose this support, you got a lot further to go, okay? You're going to come down here, most likely. And we've been talking about that for a long time, too. But what you just need to understand is that there's a reason that we had multiple price levels, okay? Because we knew that this could get hairy, and we don't know how long it'll last. We knew when it would start, right? We knew when the sell-off would start, and that was here. But we don't know when it will end, okay? Which is why you just have to be patient. Patient. I told you guys it could take weeks, right? And I told you guys, many times, when you're looking at this stuff, you might get a big rally, and it might feel like, oh, man, it's back. And don't FOMO. Just stick to our price targets. Remember, I gave you guys multiple price targets. We'll go over them again today, but this is why. Right? Don't fall for this kind of stuff, because the market's tricking you. And I hope an event like this and what's going on right now was just an excellent learning opportunity for you guys to stick to your guns, to see not only how we got here and why, but why we came up with on this channel the strategy that we have, and why we stuck to it, and why I tweeted so many times, nothing has changed. Stick to the plan, because patience wins in the end. All right. And I hope this is a good lesson of how this works as it plays out slowly over time, because I still think that these second price levels that we have down here are going to turn out to be extremely strong. Okay. And I'm still looking to be a buyer at all these places. I mean, I have bought at some because some have touched. Okay. Some have touched down here. And remember, look at what I just deleted. In the case of Global Atomic gives a really good look at more of a traditional view of the Wyckoff. Okay. So you get this bump up. All right, that's kind of your sign of what you're looking for next, which is your distribution. You're selling, okay, up here. And then you sell off. And where do you sell off to? Right back where you started. So none of these price levels that we picked are arbitrary. We picked them all on purpose for a reason. That's how we know if we break down below our first target, where we're going to our second target. You can extrapolate this to most things, because most things are charting this way. So if you want to do some research and some technicals on something that I haven't talked about, then you can probably find the same thing there. All right, guys, we're going to start uranium with Cameco. Why? Because it's probably the most important uranium chart of the day. Remember, I gave you guys price targets. I said, look, if you were wanting in uranium, then you're tracking Cameco, and you're looking for the Cameco to hit the 50 on the weekly. I said it puts it right about $24. I followed up and I talked again about how Cameco's historical price trends are similar from the previous bull run to this one. Okay, so the average downturn length was roughly 3.6 to 4 months, and the sell-off was 30 to 33%. This gives us an estimated bottom in Cameco around $22 to $24. And finally, we are at $24.50. All right. And so it came only within 2.87% away from the first target, you guys. All right, you see? And by the way, I talked about this in my previous video too, I think. And I talked about how I have seen this before. There are some big bullish names across the commodity space that are being stubborn on their sell-offs. And they're not in confluence with the rest of the market. Okay, so I try to give you guys a heads up that we're gonna trade like this until they all find equilibrium. The price levels, RSI cooling, right? You can look for signs like volume being off. And Cameco is just another perfect example. So you have Cameco hitting this huge spike volume, all right, on a massive red candle, or something like Global Atomic that's already hit its second price sell-off, right? Not that bad a volume, okay? Coming back to retest the second as Cameco comes to the first. So we're finally starting to get confluence. And we didn't have confluence because as all these other things, like for example, NXE came down and hit our first price target of 470 several times. It's just been bouncing around it, right? It's just been a magnet. It's just going sideways, okay? Where Global Atomic broke its first, came to its second, and now it's approaching the second again. But Cameco's never even hit its first. You see? That's what I meant by this. That's what I was trying to explain to you guys. That you're going to watch this, and this is going to keep going. We will trade like this until equilibrium is found in price and support levels, etc. This is exactly what I was talking about. So I hope you can get a good takeaway from this. And remember, we found these price levels. Not only is the 200 on the daily and the 50 on the weekly strong anyway, but what we did was, let me zoom out. I actually calculated how long the up moves were and the down moves in the previous bull market, right? So I know how long they lasted and to what degree they either bought or sold off, okay? And it turns out that there's massive confluence between the sell-offs. So the sell-offs between the previous bull run and this bull run are pretty much identical. So if you just follow the trend and take the average, we have to pull from the top down 30% at least, right? And that gives us about 2276, all right? And that's how we got the second price because it really coincides with the 50 on the weekly. And remember that from each peak, we always touch either the 50 on the weekly or the ascending trend line, okay? So your first buy target is this 200 on the daily, all right? Because being the leader, it's going to be a bit more bullish and more stubborn than the rest. But if you manage to fall below that, then your second target would be that about 2250 level, okay? Because not only do you have confluence with the 50, but you also have confluence with that 30% historical average of a sell-off. I mean, it couldn't be any stronger of a buy, and I hope you see how I got that and how you can use historical price action to see the future and just be patient to wait. It always went down that much before. Why wouldn't it go down that much this time? And just to recap, you guys, these are the prices we had talked about. Here are the originals, and I said, look, if you break below, then this is kind of your level 2. And you can, just look for confluence. Maybe I didn't list something you want. I can't go, list 30 prices. That's why I taught you how to do it yourself. I showed you all the Wyckoff formations. I showed you all the strong levels. So you should be able to extrapolate this on your own. I would encourage you, please do it. If you're having trouble, please send me a message. I'll help you figure it out. Maybe I can draw it for you and send you a screenshot or something. But the goal isn't to just hand you stuff. It's to show you how to do it, all right? So here's kind of a sample pack that you can work from and extrapolate the rest from there. So next we'll talk about metals. We have AG at 934 and EXK at 338. I mean, look how close we are. I mean, we're only 50 cents away from our target. On AG, we got as low as 975, only 4.38% away from our second target. This puts us at the low on the Wyckoff takeoff. I mean, I think that's a really good buy. You look at things like the RSI, the distance from the moving averages, you're starting to get to historical lows. I mean, I think we're getting there, to be honest with you. And although commodities are selling off right now with the broad space, I do anticipate that they're going to start to diverge because eventually, look, money has to go somewhere, okay? And inflation's not going to stop. So where's it going to go? I think given enough time, once things smooth out, I mean, they're going to come back into commodities, regardless of what happens to a Tesla or a Netflix. I mean, it's got to go somewhere, so why not go in real things, real companies? I foresee these levels being strong buys still, and this is, again, another example of being patient, okay? You break that first level, so wait for the second one, right? And, it could take time. It can take weeks. But sometimes you just have to let it play out and not FOMO and chase. I know it's hard to do, and honestly, it just takes a lot of experience and time. But as you can see, we always come back where we started. So this is why I showed you guys all this stuff in the past, and you can just see it playing out, see it playing out, see it playing out. And if we do get the leg lower, we do still have some more downside on some like these. And, I would be a little bit worried about bear flags. Let's see what it would look like. I mean, we have to watch. We're not out of the woods or anything. We're still $4 away from a buy zone here. Some are closer than others. But it's just like I told you in Cameco and uranium space, how some hit their first or even their second target. Some are going to hit their second target a second time, right? When Cameco is just now hitting its first target for the first time. Look at something like United States Steel. We had a buy zone on this 50, right? Because it's got confluence on this trend. And this look where we are. We're only 4% away. So it's very similar to AG. You may have a little bit more downside, but not too much. I mean, you're getting really close. I mean, I think we're coming on a cusp of good areas to finally get a reasonable bounce. So on Twitter, I was asked by Peter to talk about oil and gas. He's concerned that the underlying commodities are performing pretty well, but the equities are selling off. And honestly, it's the same story as anything else. Equities are going to sell off as long as there is risk in the market. You got to understand that when something like this sovereign debt crisis takes shape, I mean, there's far more risk than you may understand. I mean, people can legitimately get liquidated in a liquidity crisis. Okay, we've been through several major crises in the past, like the 2000 dot-com bubble. You had the 08 financial crisis. And what is brewing right now, what could potentially be on the cusp of happening literally any moment, blows those away. And a lot of people are aware of that, and they're taking it seriously. So the takeaway for equities in oil and gas is really no different than uranium or gold and anything else. It's that, as long as the broad market is at risk of major downside due to liquidity crisis or, black swans and stuff, I mean, people are scared right now. I mean, nobody's going to use their money to chase things, especially things like EOG. I think it's at, close to all-time highs and stuff. I mean, nobody's going to chase this stuff when there's so much risk in the market. So the short answer is that you're just going to have to wait for all this to blow over like everybody else. I mean, this is just the way it's going to be until the narrative changes. There are many variables. There are many ways that the narrative could change. But until it does, this is the world we live in. So I wouldn't take it as these things being bearish or anything. I don't think it's, there's nothing wrong with these equities. I mean, they're doing exactly what they should be doing, okay, which is reacting to risk. I mean, and something you should be doing too. So, there are winners and losers in markets. Some people, will either get it right or wrong for getting in or out right here, But that's the issue is it's the bond market, it's the debt market, it's inflation. This is the chief issue among all issues, and the Fed's response or lack thereof is really causing some major instability in the markets. Okay, so you just got to wait for it to calm down. So what's the too long, didn't watch summary of everything? Well, guys, you need to simply continue to be patient until the narrative is positive for equities. It doesn't matter what sector you're interested in. As long as the broad market and, quite frankly, the entire economy faces major headwind in sovereign debt crisis and inflation, and the Fed's lack of any kind of response showing that they're actually unwilling to do anything, right? They're actually unwilling to raise rates at a meaningful level, and they have not yet capitulated and started printing. So we're kind of stuck in no man's land, and the market doesn't like that, okay? So until there's a narrative change of some kind, whether it's broadly speaking or sector specific, then you can expect this to persist. Now, that being said, we do have key buy levels in things like uranium, gold, and silver equities that I think they're still very strong. I think you should still act on those. I know I personally am. I always tell you that I will let you know when I'm buying and selling things and what exactly I am buying and selling. I want to let you know that I'm becoming extremely bullish in silver. I am adding to some specific silver equities. Unfortunately, I cannot share those with you because I got them from a particular newsletter, and to share them would be honestly dishonest and unethical. But that being said, I am starting to get in to some of these. They're starting to get pretty oversold. They're, time is difficult, but price is not. I want you to keep that in mind. And please, if you like this, just give me a like and leave comments down below, good or bad, and let me know what you think and maybe what you'd like to know in the next video. Maybe we can chime in.